Hey, welcome back. Today we're taking a closer look at a story featured on the front page of Seoul Economic Daily.
Right, and we have a lot of ground to cover.
We really do. So for you, the listeners, our mission today is to dive into four interconnected front page reports. We're looking at how severe macroeconomic pressures are forcing everyone, from your local gas station to corporate boardrooms and even the military, to adapt.
Exactly. And we are going to keep this objective. No sensationalism, just a clear-eyed look at the data that's driving today's policy and business decisions.
So let's start right at the pump because folks are definitely feeling this. Starting on the 27th, the government is raising the maximum price for gasoline and diesel by 210 won per liter.
Ouch. Yeah, that is a very noticeable jump.
Right. I mean, that brings gasoline up to 1,934 won and diesel to 1,923 won. And kerosene is also going up by 210 won, reaching 1,531.
Well, to cushion that blow for consumers, Deputy Prime Minister Koo Young-kil outlined a mitigation strategy. They are expanding fuel tax cuts to offset the hike.
Wait, by how much exactly?
So the cut for gasoline goes from 7% to 15%, and for diesel it expands from 10% to 25%. And on top of that, they're directly managing the prices of 43 consumer items.
Okay, so they're raising maximum prices but cutting taxes at the same time.
Precisely. They're also controlling exports of naphtha, which is the foundational raw liquid used to make almost all plastics and petrochemicals.
I mean, it's like trying to drive a car by slamming the gas and the brake at the exact same time. How sustainable is that balancing act when President Lee Jae-myung is simultaneously pleading with the public for energy conservation just to avoid electricity rate hikes?
It's a precarious short-term mechanism to manage inflation without freezing economic activity. But high energy costs, along with the Middle East war, are creating substantial external pressure.
And that pressure is directly weighing on our currency, right? Because the $1 exchange rate is hovering near 1,500 won.
Yes, which brings us to a major institutional shift. First Vice Minister of Health and Welfare Lee Si-rin announced that the government will cap the National Pension Services, or NPS's, foreign currency bond issuance.
Cap it to a set percentage of its overseas investments, right?
Exactly. Normally, when the NPS invests overseas, it takes a domestic won, exchanges it for U.S. dollars, and buys overseas assets. That continuous selling of the won drives its value down.
Oh, I see. So by issuing foreign bonds instead, they bypass that.
Yeah, the NPS borrows dollars directly abroad. This bypasses the domestic market entirely, which stabilizes the exchange rate. However, it does add borrowing costs and debt to the NPS balance sheet.
That makes a lot of sense. But it does raise a question. I mean, does this signal to the market that our retirement funds are being leveraged just to defend the currency?
That is the exact concern Vice Minister Lee had to address. Because of the fund size, they are aiming to balance a stable exchange rate with protecting overall returns.
And how do they protect those returns?
By utilizing up to a 10% currency hedge. That means they are essentially buying insurance against the won dropping further on up to 10% of their assets.
Okay, so that desperation to manage capital and secure funding isn't just a government problem. With borrowing costs so high, corporations are taking severe measures just to fund their operations.
Absolutely. Look at Hanwha Solutions, ticker 009830.
Right, they just announced they are issuing 72 million new shares to raise 2.4 trillion won.
And the market reaction was pretty harsh. Shares dropped 18.2% to 36,801.
Wow, an 18.2% drop. That actually prompted a financial supervisory service review, didn't it?
It did, yeah. The market naturally dislikes share dilution, but looking at the capital allocation review is a strategic necessity.
Where's all that capital going?
Well, they allocated 1.5 trillion won to slash existing debt, targeting a 100% debt ratio by 2030. The remaining 900 billion won is dedicated to future technology.
Oh, like your kind of tech.
Solar, primarily.
Yeah.
That includes 100 billion won specifically for a Perovskite tandem pilot line.
Wait, Perovskite tandem, what is that?
It's a next-generation solar technology that layers new materials over traditional silicon. It captures significantly more sunlight. It's a major technological leap.
Oh, interesting. It's like, selling off parts of your house just so you can afford to build a state-of-the-art laboratory in the backyard.
That's a great analogy. They are accepting this short-term pain of diluting shareholders because traditional solar might not be enough for future growth.
Right. And this necessity for rapid technological adaptation, it isn't just saving corporations, it's fundamentally changing national security too.
Yes, this is where it gets really fascinating. At the National Defense Industry Strategy Forum, Defense Deputy Minister Won John-dae presented some startling data.
Yeah, this part blew my mind. He showed that in combat simulations, AI makes decisions in just 2 seconds.
Right, while human commanders typically take 6 to 10 minutes.
So the AI is what, 180 times faster?
Exactly. And what stands out in the data is that in simple terrain, humans and AI agree 90% of the time.
Okay, but what happens in complex situations?
Well, as battlefield complexity increases, the AI's advantage explodes. It processes variables a human simply cannot handle in real time.
Which is why the Joint Chiefs of Staff are actively accelerating their transition to an AI-based command.
Precisely.
2 seconds.
Yeah.
I mean, that completely removes human deliberation from the loop. If a human commander is taking 10 minutes to verify intelligence, the AI has already executed its decision.
It's a completely different paradigm.
So bringing this all together for you, the listener, we started by talking about the conflicting levers of the economy. Here is a provocative thought to mull over. With AI making decisions in 2 seconds, and companies betting trillions on next-gen tech to survive, will these rapid innovations be enough to outpace the sheer economic gravity of a 1,501 exchange rate and rising global energy costs? That's all for today's deep dive.
We'll be back with more insights.
You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily.